Welcome to Tax Insights, presented by Hawkins Ash CPAs.
Good morning, listeners. Welcome back to Tax Insight here on the Lakeshore's Good Neighbor, WOMT 1240 AM, 107.9 FM, and streaming online anytime at WMTradio.com. For the past several weeks, we've had Ryan with us. Ryan, good morning, sir.
Morning, Terry.
We are talking about Roth IRA conversions on today's program.
Yeah, this is a topic that comes up quite often as well with our clients. It's a strategy that impacts not just your financial picture, but also your estate picture. So that's why we're talking about it now. We'll talk about why you might want to consider this as part of your overall plan. We'll talk about some basic terminology, rules, and misconceptions. And in particular, we'll talk about why you may want to consider this move this year.
All right, so let's start off. What is a Roth IRA conversion?
So a Roth conversion is simply moving money from a traditional tax-deferred account, such as an IRA or 401k, and moving it to a Roth IRA, which is, with proper planning, a tax-free account. Now, this does have a short-term cost in that it is a taxable event that creates ordinary income when you convert. So, for example, if I convert today, that's ordinary income on my 2022 tax return that I file next spring. However, I mentioned it's a short-term pain. It can be a long-term gain. With proper planning, those dollars can reside in the Roth IRA account and ultimately be tax-free, not only to me, but my beneficiaries after I pass away. In addition, under current tax law, those dollars will not have to be distributed during the rest of my life. They will be distributed to my heirs, my kids, for example, but that's after I pass away. That's different than a traditional IRA, which currently forces people to take distributions at age 72.
So why then would someone consider doing this right now?
Several points indicate that this could be a good year to consider a Roth conversion. First, we still have relatively low income tax brackets for most taxpayers. For example, the 24% tax bracket for a married filing couple, that goes up to about $340,000 of taxable income. No one really knows what either party is going to do in Washington, but everybody suspects at some point tax rates will have to go up just to cover our fiscal needs. Those lower tax rates translate into a lower cost of converting today. And second, as most people know too well, the stock market's been hit very hard this year and overall values are down. That means the cost of converting is also down. If you expect assets to rebound at some point in the future here, you can convert today at a lower cost.
So can I change my mind afterwards?
Yeah, and this is an important point that needs some clarification. And it's not really a misconception because in prior years, someone could change their mind. They could do what's called a recharacterization. However, as part of the 2017 Tax Cuts and Jobs Act, the ability to do over or unwind the transaction was taken away. So today, this needs to be given very careful attention before you do a Roth conversion so that you fully understand the costs and benefits involved. As with any transaction, we recommend working not only with your tax advisor, but with your financial advisors as well, so that you can model out what this can look like in your particular situation.
Ryan, great information each and every week here for our listeners on Tax Insight. How do listeners connect with the team at Hawkins Ash?
They can check out our website at www.hawkinsash.cpa. Contact one of our estate planning professionals. They can follow us on Twitter or like us on Facebook.
And we'll talk to you next week on WOMT.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs, part of your business, part of your life.